Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I'm Matt.
I'm Jake.
And I'm Rabih.
Live audience today, guys. We have a live. Okay, we're just having a little bit of fun. We were having some major technical difficulties. That's why we are 20 minutes late. We hope this is going live. We're not even totally sure. We're using a whole new software for our podcasting, and we decided today we would try it for a live. I think I set it all up right, but I'm not totally sure. But while I was searching, I found some fun little media sound effects. And Rabih was so embarrassed that I had to do it. I had to give us a little cheer to start the show. We might start doing these with intro music. I'm not totally sure yet, but Rabih was worried that people would Rabih, what did you say you're worried about?
People won't take us seriously that we manage their money, but if they're fine with it, let's just put the best beat you have.
Yeah, we're gonna find a good beat. Here's my thing. We're very serious about this. We really are, but we also want to make this fun and approachable. Be the opposite of normal, the average advisor. So
we don't wear suits and ties, Rabih.
We don't wear suits and ties. We take it very serious. We really do, but we also like to have fun with it. So it's like when I present, and anytime we ever speak anywhere, every time I ever speak at an event, I always tell people at the very beginning, I have 2 goals. Number 1, add value. That's always number 1. Can we add value? But number 2, a close second, is can we have some fun? Because what's the point if you can't have some fun with this and enjoy life? So that's why we're doing the cheers. So Rabih, I'm sorry, we're gonna keep it going. I think actually, people listening, if you don't like the cheering and these sound effects we might do throughout the show, who knows?
We're going to keep doing it just to bug Rabih.
Yeah. Just to bug Rabih. Okay. I'm sorry for the longer preamble. We were having technical difficulties, and sometimes all you can do is laugh because we were struggling for 25 minutes trying to get this set up. Okay. So let's go with the agenda here. We have a little teaser. We're going to hit the teaser. Well, first we're going to do market update, of course, from Rabih. We always start with that. And then we had to get back to where we were with Jake. We didn't get to it last time, which is why Jake made a 2-week-in-a-row appearance here. And then we're talking dogs, the cost of dogs, kind of a fun little change up here. So Rabih, let's jump to you. Let's hit the market update. You said it was kind of a quiet week, but yes. I know you got something still.
It was a quiet week because Thursdays the markets were closed. Friday it was half a day of trading and not a lot of economic data were published. Next week we have inflation. The week after we have unemployment. So we'll get back on track. But for this week, it's kind of slow. And I got 2 topics I want to talk to you about. The first one, I wanted to connect it to our conversation about Thanksgiving. By the way, I hope you guys have a happy Thanksgiving.
Yeah,
it was great.
It was wonderful.
So given that we had 2 years of an inflation roller coaster, I found a good article that discusses inflation in terms of the cost of a Thanksgiving meal. So the turkey cost per pound in September was around $1.25, and that is 43 cents below what it was last September. And if you want to compare the cost of a dinner for 10 on Thanksgiving over 2021, 2022, and 2023, these were the results. Actually, before I tell you, because I don't have this shared with you, how much would you estimate a dinner for 10 people? So I'm guessing like a 12-pound turkey. And
the
sides,
total cost?
with the sides on the side, right, with the mashed potatoes, how much would it be? How much it would cost?
My guess would be like $10 to $15 a person.
I was going to do the same thing.
Like $100 to $150, $120. I'll just say $125 is my official guess.
I'm going to say $137.
Oh, you guys are double that. It's in the 60s, and that actually surprised me. But I'm assuming they're making people cook everything at home, so they keep their grocery costs down. But in 2021, the average cost of a dinner for 10 on Thanksgiving was $53.31. In 2022, it went all the way up to $64.05. And now in 2023, we dropped from the 64 to $61.17. And It kind of mimics how inflation has been. It went up in 2022 and the rate of inflation has slowed down. But what is interesting is that whenever inflation comes up and we have conversations about inflation in the economy, what we say inflation is the rate of change in prices, like how fast they are going. And we always say that when inflation goes up and then disappears, prices adjust up to a new higher level and they stay at that higher level. But if we look at the turkey prices, it was 64 and went down to 61. And I think the information we want to portray here and like the explanation is that if you isolate all other factors and you just look at inflation, it takes you to a new high and you stay at that high in terms of prices. But given that supply chains expanded and there was an issue with the bird flu last year that affected supply, the increase of supply of birds was another factor on top of inflation that acted in the opposite way and dropped prices down. So usually expansion in supply, which is a proxy to advancement in technology, is a disinflationary pressure. And that's why over the year, although stuff are getting more expensive with inflation, there is a downward trend in the cost for the value you're getting. Like not just the price, but the value you're getting. It gets down simply because technology as a driving force is disinflationary. So just looking at the price of turkey, yes, it went up and with inflation, but other forces drop it down. And this gives us a broader picture of like how inflation affects us. And when inflation actually hits the economy, doesn't mean that everything will stay higher. In isolation, yes. Compared to technology and other driving forces in the economy, not necessarily.
Rabih, that was beautiful. I mean, can anybody hang on, Rabih? Just one second.
No, we're not going there, are we?
I mean, can anyone do a better job of using analogies to with the economy and investing and inflation? Like you just used an analogy with turkey prices and
topical.
Yeah,
it was
topical. It was brilliantly done.
Yeah,
guys, you're in trouble that I found this little media little thing here. I love this. Okay, so there was something else you want to talk about with the VIX.
Yes, so this is a good opportunity to talk about the VIX because we usually only talk about the VIX when a market crash happens where the VIX skyrockets, or like when a major event, like when COVID happened or 2008 happened, the VIX went up to its 80s range, which is the all-time range it's ever been at. When you had like uncertainties in the market, such as like the bank failure earlier this year, or 2020 elections was a major volatility event. Those are times when like volatility goes up to like the 30-40% range, and that 30 or 40% is actually what the market expects the annualized volatility is going to be for the next month. So they take next month, they multiply it by 12, their expectation of what volatility is going to be next month, they multiply it by 12, and that's what you get on the VIX. So what's interesting, given that no one was trading last week, everyone off on their
Everyone
Thanksgiving
was
dinner.
Stuffing their faces, with turkey.
Shortened vacation, shortened trading week. Volatility dropped, and now the VIX is currently at 12.69, which is the lowest it's ever been for this year. And it started the year at 22.9, and it's not, now it's at 12.69. And if you really think about like what that 12% means, it just means 12 divided by 12, 1, so 1%. The market is expecting the stock market to move 1% up, 1% down,
Just
around 68% of the time.
flat. Yeah.
Which is honestly not big off of fluctuation compared to what the market usually does historically. And okay, so what's the significance of this? Why are we talking about the VIX when it is really at its lowest? This, one, just tells us what the expectations are of the market. Two, this is usually a timing indicator of like when momentum has shown in prices and it is reflected in prices, such as the 3-week rally we had last month. And also, while it does not affect the prices of bonds or affects the prices of stocks, it affects the prices of derivative securities that are used to either speculate on bonds or to hedge bonds and to speculate on stocks and to hedge on bonds. So for a couple of our clients that we try to do sophisticated strategies to meet their customized needs in terms of like equity options. And in this case, the cost of purchasing options is much lower these days, the cost of purchasing insurance, and the cost of selling insurance or speculating on events is very low, so you don't really get much money to speculate. So and those themselves, because the broker that allows you to trade your equities and your bonds also allows other traders to trade their options, and it's the same person and they have to manage the risk. The effect of not having any activity in the option market affects the trades that are implemented in the equity market. So it's all intercorrelated. That's why there's like contagion from one market to another. And the fact that the market is slow is just optimistic in terms of like expected worries and whether people are pricing in risks that we're not aware of.
That's what I was going to say, Rabih. So as far as I know, tell me if this is incorrect, but the VIX is considered the fear index, right? It's kind of that's what it's known for. So the higher that number, the more fear there is, the more volatility that's expected. The lower the number, the opposite, right? People are expecting it to be quiet. So as of right now, what you just said, what I'm gathering from that is how a normal dentist out there would think about this. Like, why does this matter? Outside of the derivatives and things you're talking about, it's more just like, what is the VIX is kind of like expectation around the ups and downs of the market in the near term. And right now, based on the number, we're expecting it to be pretty quiet.
That's right.
That, right.
That's right. And that's a good signal.
That's a great signal, right? So I guess I'm curious on the technical side of the VIX, like how quickly can this flip? Is this a leading indicator? Is it a lag? It's a leading indicator, I would guess. But how quickly can this flip? Like it's 12 right now. Is this a month-to-month thing? Could this happen at the end of the month? All of a sudden it's doubled? Like how does that work?
The VIX is one of the most volatile things in the market. So if you think the stock market is volatile, just watch the VIX.
Watch the VIX.
And to give you some insights, I'll just let you know how the VIX is calculated. The VIX is calculated based on an average between the prices of put options and the prices of call options. So if people are actually rushing to the market right now to buy put options to insure their portfolio, just the fact that there are people rushing in to insure their portfolio drives the VIX up, because that action gives you insight. If no one is there going out there to hedge their portfolio, you'll get an insight that no one is worried. But if you see a couple of people who are going out there hedging their portfolio, it tells you that they are worried, and you reflect it in the fear index. So if overnight an event happened in this very interconnected globe that we live in, whether it's geopolitical or economic or natural disasters related, and people flock in to hedge their portfolio, the VIX might move really, really fast. This is literally telling us, given that nothing happens, things are looking good. Given that nothing happens.
Got it. So this can flip quick, but as of right now, it's showing us that
it can flip overnight really bad.
Yeah. That makes funny, with it being so volatile, where it essentially represents investor sentiment, right, towards the futures. What we've been talking about, which is volatile, and we always change our minds on what we think is going to happen soon. Yeah, it's interesting saying, a lot of people do pay attention to the VIX, but with it flipping and being able to change so fast, I do find it kind of funny where it's like, is it even an indicator to pay attention to? I mean, if it can flip from one day to the next, what's the point of knowing what it is today?
It is for
good question.
It is for people who are exposed to volatility, right? So for people who are trying to hedge their portfolio in the unconventional way of just
it's for traders,
in bonds,
mainly, not investors, right?
Yeah.
For traders, and for if your portfolio is complex enough that it is swayed by volatility, then it is important. I think the main insight for a long-term investor over here is just that if the cost of insurance is cheap, it's just a sign that no one is worried that something is going to happen in the market in the near term. If the price of insurance is high, then there are worries, and I need to learn what they are. And that's about it. The price of insurance can be captured by the level of the VIX.
And just so people out there, they're probably wondering, maybe when you say the cost of insurance, they're thinking life insurance, disability. Like, what are you talking about? You're talking about hedging strategies, using options, acting as insurance for a portfolio when you say that.
That's right.
Okay. Just want to make sure that people out there aren't thinking like well, do I need cybersecurity insurance? Like,
Mhm.
okay, that's awesome, Rabih. I won't torture you with another clapping clip here.
Thank you.
We'll wait till the end. Jake, let's jump to you. You teased this last time with housing. We didn't have time
Yeah.
to get to it, so let's go.
It's funny. I know. I feel like we built this up over the past episode, and now
Do we
today.
need a drum roll? Is the question. I don't know.
Do you have one on your docket? Let's hit it.
Yeah, we actually do. Do you want to hit it really quick?
No, we built this up too much. Okay, there we go.
Go ahead.
Okay, without further, let's talk about the housing market. Which it feels like at the stage of life that I'm in right now, I'm a millennial. It feels like millennials are in the home buying stage right now. This is a conversation I'm having a lot, not only with clients, but people just in my family and, circle of friends and coworkers. Just buying houses in the housing market seems to be something that's, just in my life a lot right now. I wanted to frame this whole conversation really just around like one of the questions that I get often. I was talking about it this morning with a client. I talk about it all the time, which is it a bad time to buy a house right now? Like, is it like, people always ask me, like, is this just a terrible time? Should I even be looking to buy a house right now? Matt, are you getting questions similar to this still?
Yeah, I mean, I get questions like this all the time from either clients and or friends, family, whatever. It's the same thing as like, is now a good time to invest? It's like you get questions like that all the time. Yeah,
pretty evergreen. I feel like though that question has become more prominent over the past couple of years as we've seen the housing market really skyrocket. It started a little bit before the pandemic, but the pandemic is really what made house prices go pretty crazy. I actually was looking at a stat which I want to share, which is that the housing market, like the average house price, has gone up about 50% over the past 3 to 4 years, which is
wild.
Just wild. Like, for context, houses go up about 50% usually every 10 to 15 years. Like, we've fit a whole decade of growth in the housing market within these past couple of years. And so I think this is causing that, combined with rising interest rates, have made people really question, like, okay, I want to buy a house. My family's getting bigger. I need to expand. But should I even be looking at buying a house? Things seem so expensive right now. So I wanted to try and give some context or an answer here of like how we would answer this, or what's, some data I'm looking at to try and answer this question if it's possible to do so. So my response based on kind of some data here. Well, let's do this before I get on my question, which is Ben Carlson. If you know about him, he's a kind of a finance writer that a lot of us we like to listen to. He does great work. He put together a chart about a week ago where he took the last 9 recessions in the U.S., right? Overall economic recessions, the last 9 of them. It goes back to about 1960. And then he juxtaposed those with housing prices, just to see like what our housing prices do during a recession. The reason he did this is because in my conversations about housing a lot, I have people say, okay, well, is housing, like, is it a terrible time to buy right now? Kind of implied in that answer is there's going to be a good time in the future.
I was just going to say, what are they really asking there? There's like,
Yes.
Is it now a good time, as in, is there a better time later, meaning are housing prices coming down?
Yeah, like, it's a bad time right now, but if I wait a little bit longer, can I get the houses? Is there going to be the right time to buy soon? And a lot of people, I think, are like, just wait, a recession's on the horizon. Inflation's been going crazy. Rabih just talked about that. Like, we're going to get a recession at some point. And when that recession happens, I'm going to buy my house, right? Kind of when the economy takes a hit. And so Ben Carlson, he put up this graph. He said, okay, here are the different recessions, and here's what house prices did during those times. So over the last 9, house prices dropped twice. So over the last 9 recessions, during 2 of those recessions, housing prices dropped. Obviously, the big one in 2007, 2008, house prices dropped on average about 14% during that recession. And then in July of 1990, we had a little recession and house prices dropped 3%. So not that huge, big drop there. And then over the other 7, house prices actually grew during a recession. Like, they went up during an economic recession. And so the point of this data is to say, if you're kind of waiting to buy a house or waiting for that right time, you're waiting for the economy to take a hit because you think house prices are going to drop 20% and you're going to be able to buy the home of your dreams. Historically speaking, that really hasn't been the case with houses. Like, they're not, speaking of volatility, they do not drop like stocks do. They do not go up 30% and then down 20%. They kind of hold their value pretty well. Does that make sense? You guys understanding kind of what?
Totally. Yep. Yeah,
And so I
odds
don't
are
know
not
that.
in your favor if you're thinking you're going to wait. Yeah.
Yeah, so like my response of like, is it a bad time to buy a house right now? I don't know if bad time is the right word. Like, yes, houses are expensive right now. Interest rates are high. I think house prices actually hit new all-time highs in America like last week. Like we're
Yep.
still like house prices are still going up despite interest rates rising. And so this is causing a lot of stress. Housing is so expensive right now. But people have been asking me this question for the past couple of years, right? Like, is it a bad time to buy right now? This kind of stings as there going to be a drop in prices. And so my answer would be yes, it's an expensive time, but there's no guarantee you're going to get cheaper prices anytime soon.
Yeah, yeah, no, Jake, that's great data to have and good perspective. I think also what I'd say to a client or anyone if they said is now a good time to buy, I'd say maybe, but it has nothing to do with the market,
Boom.
right?
Yeah.
Like it has everything to do with your personal situation. Like, is now a good time to buy for you in your personal life? Do you have the down payment? Do you have the cash flow? Like, are you in the area you want to be? Like, these are the questions to be asking, not what's happening in the market. Because to me, it's like the same thing with investing. Was it 5 years ago better to invest? Was it better to invest 5 years ago in a brokerage account? Of course.
Yeah.
Is now still a good time to invest? Yes. Both things can be true. So,
Yeah.
would it have been
Yeah,
better to get a house 4 years ago? Sure. But it still could be a good time to buy if it works for you personally.
Yeah, that we can't control what interest rates are going to do or what house prices are going to do. So let's just say, okay, housing is expensive right now. We just got to accept that fact and just see, okay, does it make sense for you right now to buy a house? Does it fit within your budget? Is it the right time? Can you find the right house in the right place? And so, yeah, that's kind of the point, Matt. You hammered that home there, which is we really can't control what's going to happen. If you're waiting around for house prices to drop, you could be waiting a long time, I guess would be my thing.
Yeah, a very long time. And I think people equate what's happening in the market. They think because we've had rapid increases in prices with homes over the last few years, to your point, Jake, they immediately think and this is normal. I don't blame anyone for this. I think we all do this, where it's like, oh, when's the last time this happened? Like, our brain is like going through our catalog of like, this is crazy. What else was a crazy time when this happened? Oh, 08, 09. And they immediately think it's got to be the same thing. It's got to be the same result. But it could not be more different of like the driving forces that have led to this. So this has nothing to do with 08 or 9, or these aren't the same things, even though the one variable being that's similar is that home prices have gone up quickly.
Yeah.
But if people think they're waiting for an 08 or 09 to like flip home prices all of a sudden, and even you said, Jake, even in 08 or 9, they dropped what, 14%?
Yeah, so that's a national average. I know there are certain pockets of the country where there was huge 20, 30%
Sure.
dips. But really, if you look back over housing market data over the past, not even just 60 years, but 100 years, house prices do not drop 20%. They just don't. Like, that does not, like, it's never really happened before. It happened in 08 and 09. I think it happened a little bit in the Great Depression. Besides that, like, they're just pretty resilient. So yeah, could we see a drawback of maybe 3% or 4% or 5%? Sure, something like that could happen. But I just don't think, like, if you're like, hey, I have a house at $600,000, I want to buy it, but I'm going to wait until it gets down to $500,000. I just don't know if we're seeing huge price drops like that. That just, historically speaking, just doesn't really happen often, unfortunately.
Yeah. Robbie, do you have anything on this?
I have a question I'd like to ask you about, like from a financial planning perspective. When you guys were mentioning, so is it the right time for you personally to buy a house? What goes into the criteria to know, like personally? Is it just the budget, or how long do I expect to stay in that house? Like, what goes into that formula?
Yeah. You want me to go, Jake?
Yeah, go for it.
Yeah, so I look at a few different things. I think on the lifestyle side is just in general, you just hit it, Robbie, is no one can really know this, but I would want to understand the longevity expectation, right? Of like, is renting better than buying? So for example, if a dentist is going in to start his or her first associateship in a new city, right? That alone would be a factor for me. They have no connections to the city, no family, no friends. They're just moving to a new city for the job. I would right there lean, even if the financial side supported them being able to afford a home, I'd probably lean towards them renting, just because of the likelihood of them possibly wanting to change their mind, right? But let's say that's off the table. They know they're going to be in a place they want to be. Then it just comes down for me to the financial stuff, which is cash flow. Like, I'm looking at debt to income ratio, right? What percentage of your income is actually going towards housing? Ideally, you want to be no more than 30, but really you want to be somewhere in the 20 to 25% range, meaning 20 to 25% of your total income going towards housing costs. For easy math there, you make $10,000 a month, $2,000 to $2,500 a month going towards housing. You can pretty much double that for most dentists or more. But that's about what I'm looking at. Also, do you have the down payment, that kind of stuff? So those are the kind of the main factors I'd look at. Jake, what about you?
Yeah, just to speak to my general rule of thumb, again, just a rule of thumb, it does not apply to everybody, but I wouldn't start looking to buy a house until you feel like you're going to be in that area for 5 years is kind of my general rule of thumb is a good. The reason being is when you do buy a house, there is a down payment, there are closing costs, there are just different taxes you might pay up front and just furnishing the house and different things. There are a lot of just upfront costs to getting into a house. And so if we're looking for just from a purely financial standpoint of what's going to make, usually buying a house and building equity makes the most financial sense in the long run, typically if you're going to be somewhere for 10, 20 years. But really renting does make more sense. If you're to buy a house and leave in a year or two, you're probably losing out. You don't have your time. There's not enough time for your house value to grow and different things there. So usually, yeah.
And the interest costs, the transaction
interest
costs
and things. And so, yeah, like you probably want to be somewhere, 3 to 5 years, at least before, committing to buying somewhere. If not, renting's going to probably be better for you. And then, yeah, just as Matt said, just depends on your budget and where you're at. What makes sense for you.
Yeah. I was going to say one more thing on this. I just think it's interesting that people do this on both sides of the equation, meaning, so they I think we tend, I'll say we, because I think we all do this. We tend to rationalize lifestyle decisions with spreadsheet financial kind of justification. So let's take the opposite side of this equation, Jacob. People that talk about like remodeling homes or or even buying a new home that they think is maybe a little bit out of their budget, right? What I get, and Jake, I would be interested to hear if you hear this too, but what I get all the time is people saying, well, if I put in this new kitchen or if I do this or that to the home, like it's going to increase the value by X, Y, or Z percentage. Right. Or that's like they're justifying like as it's like a financial asset, almost like they're gonna, like it's an investment asset. I just think it's interesting that, but it's a lifestyle choice, right? And there's nothing wrong with that. But people do this, and even what you're saying right now, this question you're talking about is now the right time to buy. It's like you're almost looking at it as if this is a stock you're buying. It's like this isn't a stock. This is a home. This is a lifestyle decision. Really, the market has nothing to do with this.
Yeah, you want to buy a house, but you're looking for it to also be a good financial move, quote unquote, to make you feel better about it, right? It's like I want to buy this house, but if I feel like I'm getting a deal or I'm buying in the right market, then I feel better about this purchase.
Totally.
Yeah, we would just argue it's a lifestyle choice more than anything.
Yeah,
we
and
do
that's
view
okay.
homes. Yeah, and our maybe not controversial opinion is when we're planning with clients and things, we really do view your home as less of, it is an asset. You're building equity and things into it, but you're always going to have somewhere to live. It really is more of buying a house could almost just fit more in the spending category more than kind of the investment category
totally
there. So it really just depends on where you want to live, how big of a house do you want. It's generally, again, maybe you pass on your house to your kids, but you're usually never going to sell your house to fund financial goals in retirement.
Unless you have to. Yeah. But very rarely should you. Yeah. Or people doing that. So anyway, I just think it's interesting when we talk about this, how many times we get that. So anything else, Rabih? Anything else you want to add on the house stuff? Okay. Last thing we're going to talk about, this seems we're all over the place when I bring this up. Now this feels really out of place, but
it's great.
The best dogs for your wallet is the title of this article that I found. I actually had a friend send this to me that I thought was interesting. So the Wall Street Journal looked at costs and desirable traits of dozens of dog breeds to decide which breeds gives the best bark for your buck. The best bark for your buck. And Rabih knows what's coming. Come on. Okay. So I thought this was interesting because we get this question actually a lot, not about dogs, but I did find this very interesting when I was looking at the breakdown here. Because we do get questions around like cost of kids, right? I don't think I've ever been asked about the cost of dogs, and I've never thought about it, like the cost of a dog over the lifetime of that dog. This article actually breaks it down. And the reason my friend sent this to me is because the number one ranked dog for best bark for your buck was what's called a rat terrier. That just happens to be the dog that I have. It's a rat terrier.
Oh,
I know,
okay.
Jake's like, that's weird. I know, it's a very horrible name for a dog. But my
What's the
dog.
reasoning for that, Matt? Why is it the cheapest dog?
Well, it's not the cheapest. It's the best. It's like the highest. So the kind of their breakdown was the cost-effective champion. And so what they said was they're balancing costs with desirable traits. So I'll break this down. So the rat terrier, his name is Gunther, is my dog. So the lifetime expenses of a rat terrier. So their expected lifetime is 15 years. The lifetime expenses 28,573 for over the course of that dog's life, right?
Okay.
And then they break down, okay, what's the cost of the puppy? And then they balance that with the traits. So trainability, social skills, family life, and then maintenance. And then that gives them a score. And Rabih and I were actually going through this. We're not going to go through everyone. There was like 81 dog breeds.
Yeah.
But I did think it was interesting. They break down. So a couple of things. The American Pet Products Association projects Americans will spend nearly $144 billion on their pets in 2023. I know Jake is losing his mind right now. A bulk of that, $63 billion, is for food and treats. So $144 billion spent on animal or pets this year. So, which is wild. The average, where was this? The average, I had just had it. Where is it? It was, oh my gosh, I just had it. The average, here we go. The average lifetime cost of ownership across all breeds is $33,135. That is the starting price of a 2024 Honda Accord hybrid. So, Jake, I know you got thoughts on this.
I'm actually like I'm just like hanging on your every word because this is so fascinating. Yeah, people may not know I am not an animal person or a pet person per se.
Neither one of you are really, right? Rabih, you're not either?
I like pets, but it's more of a lifestyle issue too. That's why I don't own pets.
Yeah, I have 2 kids now. That's enough responsibility and chaos, I feel like, in my life now. I probably will cave though, right? What's the thing? Your kids get older, they want a dog, and then I'm just a softie, right? And we'll probably buy them a dog at some point. Yeah, so that's going to happen. I just think this is interesting. It goes back to maybe our spending point, which is, I think spending $33,000 over the course of a dog's life is kind of insane. Like that just sounds crazy to me.
You were gonna anger some dog lovers out there right now. There's a lot of rabid dog lovers out there.
But this is the point I'm getting to is, like in my mind, I'm like, how many golf trips is that, right? That I can go on like that $33,000, which would probably give me more value, and I would enjoy that a lot more in my life. But other people are probably thinking $33,000 on golf? Are you kidding me? You're crazy.
Now,
and so let's go back to just, it depends on what you want to spend your money on.
Your values.
Yeah.
So if we broke it down, Rabih, you and I broke this down. We thought the average is about, if you have a dog, the average you're spending a year on them is probably around $2,000 on average. Now I will say this also. This report is including dog insurance or like health, like insurance for your animal, which I don't know how. I know that's it's a growing field. I don't have insurance for my dog, I'll be honest. But I know so they have like a monthly premium here for insurance for these particular dogs. But either way, if you're spending around probably $1,500 to $2,000 a year on your dog, on average. So Jake, again, you're hearing that and saying, well, I'd rather spend that on golf, which totally get. But I just thought it was interesting because again, I'd never thought about the lifetime cost of a dog. So just so you know, the most expensive dog out there, if you have one, a Tibetan Mastiff, they said a lifetime expenses just under $50,000. So $48,785 for a Tibetan Mastiff. So there you go. Rabih, any thoughts on the
I'm just
cost
enjoying Jake's reaction.
I know.
A counter argument to me would be this: like, if someone's like, "Oh, you animal hating person," which I'm fine, I'll take the hate. You can leave it in the comments. It would be like, okay, well, you have 2 kids. If you run the cost of kids, like from 1 to 18, it is like 10 times what that amount is. So I guess I'm being a little hypocritical there. Pets are a lot less expensive than kids, I guess, if you want to go that route.
Yes. And I think people look at it in a similar vein of like, what is it bringing, like the joy it's bringing to your life or the purpose it brings to your life. I actually read somewhere recently that there's been studies done that kids actually don't make you happier. This, and I'm not kidding you. This is a real study that they found that kids actually don't make you happier, but they do provide you with a sense of purpose, which is more than worth it. So I would argue my kids make me happier, but most of the time
depends on the day.
Depends on the day. So anyway, we wanted to end with some fun. I mean, do we close it out? I mean, I feel like guys, excellent job, incredible work there. So we hope.
How many episodes will this keep on going for?
Maybe this cancels it. I don't know. We're going to get canceled now. Thank you so much for listening. We hope this was live. I really do. We're not totally sure. I'm going to have to go back and check now on Facebook. Otherwise, the majority of you listened to on the podcast anyway over the weekend. So thank you so much for listening. Jake, Rabih, thank you. That was our 2 cents. Until next time, bye-bye.